Rohit Srivastava is joining us right now, fund manager at Sharekhan. Rohit, thanks very much. Good to have you with us here. Where do you stand on the market, Rohit?
See, I'm seeing this as a bounce back right now. The market spent most of the last month in a 100-point range between 6,000, 6,100. We've just moved up a bit. And my sense is that we probably won't get past 61.45, but we would remain negative on the market till it stays below 61.95, which is around a 60% retracement of the sell-off that you saw in late January. And my sense is that from here you'll start seeing another round of selling somewhere, probably in a week's time or maybe any time now. And the target then from another round of selling would be closer to the 5,700 mark on the Nifty.
Somewhere around here. So you'd
yes, 61.45 is the first level that we would consider.
Yeah, but it's gotten very, very muddled, right, Rohit? I mean, you sell and you hold on for long, you lose. You buy, you hold on for long, you lose. I'm talking about, say, forget stocks. I'm just talking about the index as well.
Well, there's been a lot of rotation, but if you generally look, stocks have actually headed down. For most of last week, I think the breadth was almost 1,400 stocks down every day except for the last 2 days. So a lot of stocks have moved down. The index itself, yes, it hasn't fallen a lot, but from the high of 6415 that we made way back in November, December. From there we are down some 300 points, but we haven't seen a lot happen because somewhere the market's spending a lot of time in the same range. Say for example in January you did fall close to the 6,200 mark, then you spent the rest of the month in a 100-point trading range. Within 6 days you went from 6,300 to 5,930, and then we spent the last 2 weeks between 6,000 and 6,100. So it's quite painful watching the market remain in the same range, because then you can't really take any, you don't get really major trading moves, and that's not helpful. But the trend to me still remains down. There isn't enough sign to say that you're reversing from here. We are just seeing it bouncing around, and my sense remains that we are headed lower rather than higher.
Yeah. So what's the best way to play that view?
The best way is through probably stocks. Stocks have been performing worse than the index, so you have to focus on probably the weakest areas. The weakest areas, of course, banking, and then you have others like metals, which have also started turning weak. So we look for those pockets to stay on the short side.
What specific names there, Rohit?
Yeah, I think State Bank of India is one of the weakest and still remains the case. So as and when it bounces back, we look at shorts, and if you're holding on, we just keep trailing stop losses. Axis Bank is another which was weak for most of this move, and even Yes Bank. So both of those private sector names continue to be weak. They've bounced back a bit in the last 1 or 2 days, but I think they are the weakest areas. Among metals, we are seeing the same thing in Hindalco. Tisco's probably not been that weak. It's fallen, but it keeps bouncing back. So I think Hindalco is probably the best bet on the sell side within the metal space.
Yeah. I mean, how is the global setup looking, Rohit? Dow, etc.
Yeah, see, from the global setup, we did see the US market fall a lot in Jan, but it's bounced back quite significantly. So we are not able to take a clear call as to whether this is just a bounce as far as the US is concerned, because it's really not fallen below some key levels like the 20-week average, which it's held for most of the last 12 to 18 months. So it's become slightly difficult. A lot of sentiment readings were at an extreme as far as the US is concerned. So it's possible that market still gives up unexpectedly.